Fun Game Finance. Today, guys, we have some exciting news about Rivian. Rivian is apparently set to end the Amazon exclusivity deal by Q4. So, by the end of this year, Rivian electric delivery vans will be available for sale to everyone, not just Amazon. California EV startup Rivian may end the exclusivity clause in its deal to provide electric delivery vans. The ending of exclusivity agreement would allow Rivian to branch out to other commercial fleet customers. But it is not expected to cut off its relationship with Amazon or curtail the firm's existing orders with the automaker. Amazon now has over 10,000 electric delivery vans making deliveries. These were all built by Rivian, and Rivian will continue to deliver these vans to Amazon. However, the potential for other customers here is huge. Rivian will actually be able to make a huge profit selling these electric delivery vans to everyone else, because their exclusivity agreement with Amazon basically locked them in for a while into a price range that is far below what the vans are actually worth, because these agreements were made during the pandemic. Basically, while they're only breaking even or making a very, very small profit on the electric delivery vans going to Amazon, while when they start selling to everyone else, this will be a huge cash flow positive revenue generator. The exclusivity deal with Amazon propped up Rivian's revenue, accounting for 21% of last year's revenue, equal to $343 million. So basically, EDV is around 25% of the total business. Once this opens up, they will probably be around 50% of their total business. And this is actually probably their more profitable segment, just because they don't have so much customization going into these vans. People are not custom ordering colors, wheels, and everything else. Basically, they just come built standard and everyone gets the same copy of a delivery van. So they're much easier to produce, especially now since Rivian is using their own motors. They'll basically be adding more and more materials they produce themselves or are deeply involved into production, basically to lower costs. This could easily add over $1 billion to Rivian's revenues even just next year. However, I see this going into multi-billions just because everybody's so desperate for these vans, especially now with high gas costs. And I think UPS, FedEx, USPS, DHL, basically everyone will just place massive orders for these vans. And Rivian will probably have to up their production estimates for next year. It's very interesting to point out that Rivian actually has over 1,000 electric delivery vans in Germany. I think Germany and Europe will make a huge part of these orders that are basically just waiting for the exclusivity agreement with Amazon to end. So I can see just Germany, Norway, Scandinavia overall just placing orders for hundreds of thousands, if not millions, of electric delivery vans. So this is going to really rush Rivian to profitability. Rivian was first reported to be in talks to end the exclusivity with Amazon in March, and CFO basically hinted at the expansion beyond the exclusivity deal in June, speaking at a Deutsche Bank Global Auto Industry Conference. Amazon is probably willing to do this just because they are a part owner of Rivian. So if Rivian revenues increase, it looks a lot better on Amazon books as well. So the ending of the agreement will still probably give Amazon some sort of exclusivity, such as all the vans they require, as soon as they get permitting, they'll get the vans first. So there'll probably be a waiting line with Amazon still taking most of the orders at the top as Amazon builds out their charging infrastructure and gets all the permits for the charging stations. So basically, as Amazon is rolling out everything, they'll get the vans first. However, if Rivian capacity is to produce 100,000 vans and Amazon only needs about 10,000 per year, it makes sense to have these 90,000 other vans just go to other companies, just go to fleets, not even necessarily a delivery company. These vans can go to other businesses such as plumbing or electricians, or they can even probably be converted into living spaces. These vans are huge and van life is very popular, so there's so much demand for these vans. And it's going to be a huge positive development just ending this exclusivity agreement. With the capacity to produce 65,000 EDVs per year, and the high margin that Rivian can make on the vehicle, the potential of the company broadening its commercial fleet vehicle customers base beyond Amazon has analysts being very bullish. Rivian reiterates that it expects to reach positive gross margins by the end of 2024 as EDV and Enduro R1S production ramps up. Any expansion to fleet customers beyond Amazon could therefore lead to an upward revision of company's guidance in the next few quarters. So Rivian will be able to ramp up production of EDVs. They'll probably add additional lines, additional shifts, and this will all contribute towards profitability coming much quicker. Because if Amazon is only taking 10,000 vans and they have the capacity for 65,000 vans to be produced, revenues are going to at least double just from this segment. Those exclusivity conversations are likely ending, maybe as near as this Q3 earnings call. So when Rivian reports earnings in about a week, it can be a huge catalyst for the stock. One, if they announce this, if basically they say we're going beyond Amazon, we're still with Amazon, but we're acquiring additional partners, we're acquiring additional customers. So this can be very, very huge for the stock. Basically, what other analysts are saying as well is this also diversifies Rivian's revenue stream, because if they lose Amazon as their only customer, they will lose around 25% of their revenues, just because 25% of the revenues was the vans that were being sold to Amazon. However, if Amazon was to drop out, if Amazon changes their mind for some reason, they did not have any other customers lined up in the pipeline. So now basically they will have the capacity to sell everything they make, just because there won't be this overhang of Amazon leaving. And I think a lot of analysts are really going to react positively towards this, just because it removes a lot of risk from Rivian and from having that just one customer. So these are potentially huge developments for Rivian. The stock has taken a beating, but the overall market has been crashing. Everything has been down basically across the board. All the stocks went down, especially with Tesla disastrous earnings call. Basically, Tesla and Rivian, they're very correlated in their price movement. So if Tesla crashes big, it usually really pulls down Rivian as well. And if Tesla has a good day, usually Rivian does as well. Most likely this is happening because Tesla and Rivian are probably held in similar ETFs, similar funds, and they're also extremely heavily shorted stocks. Tesla has been one of the most shorted stocks in the history of the market. What I'm doing here is I'm still holding Rivian. I'll probably be adding some more shares. I still see everything very much positive. So the stock drop or the stock price fluctuation is not really impacting me that much, just because I am a long-term holder. I plan to hang on to this stock for at least several years. So I'm not really bothered by this noise, by heavily shorting, by heavy shorting, by just obnoxious bearish sentiment towards the stock and the market in general. Because in the end, markets always go up. And all you really have to do is just be patient and dollar cost average your positions. Everything will work out. A lot of people are panicking, but once people panic, that's when you know you're supposed to be buying. When everyone is happy, when everyone is over optimistic like we were in 2001, those are the times you're supposed to panic, not now. So that's it, guys. Just to give you a quick update on Rivian. If you have any questions, comments, please let me know below. Guys, like and subscribe, and as always, have a great day.